Hello and welcome to Tax Returns Simplified. Completing a tax return can be a daunting and stressful experience for many. We at Proactive Resolutions have made this short presentation to help make the experience less painful. If after viewing this presentation you feel that your stress levels will remain high, then please contact us to see if we can help. In our presentation, we're going to cover the following. Who needs to complete a tax return? Some of the key information we need to be able to complete the return, what businesses can claim for, and key dates and paying the tax. We will be focusing on tax returns that have to be completed for individuals for the tax year 2015 to 2016. This is known as self-assessment. The tax return will include income and capital gains transactions between the 6th of April 2015 and the 5th of April 2016. Income will typically involve business profits, salaries, benefits in kind, rental income and dividends. The main situations where a tax return is required is if during 2015-2016 you were self-employed or you were a higher paid employee. This is where your income is in excess of £42,386. Or you were a company director, unless it was for a not-for-profit organisation and you did not receive any financial benefits. Or you receive child benefit and you or your partner has individual income over £50,000. Or you have income of at least £2,500 that has not already been taxed, for example rental income. Or you wish to claim loss relief. Or you have made profits from capital transactions, for example disposal of shares or second homes. There are two parts to the tax return, the core return and extra pages, referred to as supplementary pages. The core part is where we fill in our personal details such as our UTR, name, date of birth and national insurance number. We also provide details of income from savings, pensions, pension payments made, gift aid claims and allowance claims. The supplementary pages are used to record details for employees or company directors, self-employment, business partnerships, UK property income, foreign income or gains, capital gains, non-UK residents or dual residents. Before we start completing our tax return, it's useful to gather together the information that we will need to complete it. It certainly makes life easier. One critical piece of information we need is our unique tax reference, also called a UTR. The UTR is a 10-digit code, unique to each taxpayer, and we can't normally submit our tax returns without one. Supporting documents include P60s, P11Ds. If we have income from employment, then business accounts are useful. If our income or profits comes from property, then rental accounts will be needed. We need to make sure that we have some form of backing documentation or evidence to support the information and figures that we include in our tax return. In some circumstances, reasonable estimates can be made. HMRC will cross-reference, check and validate what we have entered against information they already hold, and in some instances penalties can be charged for mistakes made. Make sure that you are able to support and explain what has been entered onto the tax return. If we are self-employed, then tax is based on our business profits. This is the difference between what we charge your customers and what our tax allowable business expenses are. Any business expenses that we claim must essentially be for business purposes, i.e. wholly and exclusively for the business. There are some expenses, such as a mobile phone, which are used for both business and personal reasons. HMRC, by concession, allow us to claim a business proportion. This concession does not apply to companies. If we have to travel to see a client, then we can claim for travel costs, whether it is trains, planes, automobiles or even pedal cycles. If we attend training courses which further develops or improves our current skills, then these will normally be allowable. If however we acquire skills or qualifications that we didn't originally possess, then that tends to be disallowed. We can also claim for using our home as an office, or where the majority of the work that we do is carried out. Entertainment of clients and suppliers, however important they are, is not permitted. Work-based clothing, such as steel toe caps, embroidered or branded workwear, is permitted. Legal and professional costs, for example costs of renewing a lease, accountancy for accounts preparation, is allowed. If our business has sales below the VAT registration limit, then HMRC allows us a choice of claiming certain expenses based on their actual costs or using scale rates, known as the simplified regime. This simplified regime only applies to sole traders and partnerships. Limited companies cannot use this regime. In respect to vehicles and working at home, we need to keep a record of business mileage that we have travelled and hours that we worked at home. The three main areas that the simplified regime applies to is using vehicles, working at home, work-live premises, for example, a B&B type arena. The rates allowed for use of a car or a van is 45 pence per each business mile travelled, up to the first 10,000 miles and then 25 pence per mile thereafter. If we use a motorbike or motorcycle, then we can claim 24 pence per business mile travelled. Some of us may use part of our home as an office. We can either claim the actual costs incurred or a scale charge. The scale rates are based on the number of hours we work at home. For example, if you work on average 25 to 50 hours per month, then you can claim £10 per calendar month. If we work in excess of 101 hours at home, the rate goes up to £26 per month. Self-employed businesses or partnerships are allowed to calculate their profits on a cash basis. This is only available if sales are below the VAT threshold. The cash basis is the difference between business cash received and business cash expenses. Expenses will include capital equipment, for example PCs. One limitation in using the cash basis is that we are restricted in how those business losses are used. For example, we cannot offset it against other income. Another limitation of the cash basis is where we have borrowed money to start or run our business. Interest is capped at £500 a year. Businesses using traditional accounting can switch to cash accounting and vice versa, although adjustments may need to be made. When we operate a business, we may make capital purchases, also known as fixed assets. These are items that support our business and help us do what we do. Typical examples of capital purchases are PCs, vehicles, plant and equipment. In traditional accounting, we do not deduct the entire cost of the capital item when calculating profit. However, when we calculate tax profits, we can claim the entire cost of that purchase through capital allowances. There will be situations where it is not advisable to fully claim all the capital allowances. For example, where our profits and other income is low. If we are not already registered for self-assessment and have a source of income that's not been previously notified to our friends at HMRC, then we must inform them and register from the 5th of October following the end of the tax year in which it arose. If we wish to submit our tax return in paper form, then we must submit this by midnight 31st October 2016. If we wish to submit our tax return online, then we must submit this by midnight 31st January 2017. If we have income under PAYE and we owe tax, then if we submit our tax return by the 30th of December 2016, any tax owing up to £3,000 can be collected via our tax code. Any tax that we owe for 2015 to 2016, plus any payments on account, must be paid by 31st of January 2017. A payment on account will normally be due if the tax we owe is over £1,000. The payment will be equivalent to 50% of the tax owing. It's possible to make a claim to reduce payments on account. For example, where we anticipate that the 2016-2017 income will be less than that for 2015 to 2016. The second payment on account will be due on the 31st of July 2017. The situation may arise where we are unable to pay your tax on time. If this happens, avoid the ostrich stance and don't delay submitting the tax return. We should submit the return, calculate how much we can afford to pay, and then contact HMRC's Debt Management Department. We can normally negotiate an instalment arrangement. HMRC will want to know how much you can afford going forward. HMRC, if needed, will engage the services of external debt collection agencies to help collect any tax owing. Thank you for your time and attention. Please contact us to see how we could help you. Drop us an email at info@proactiveresolutions.com or visit our website www.proactiveresolutions.com to explore our free resource library, and visit our sister company's website at www.knowledgegrab.com for online courses and free learning resources. Thanks for watching.